Hello, everyone, and welcome to the Altos Trading Live Strategy Session with Jeff Tompkins. This is your host, Richard Van Rich, and we have Craig Ward with us here tonight in the chat. We are really excited to have you guys with us here tonight. This is another one of those wonderfully timely sessions we have based on what's happened in the market. We are definitely excited to have you guys with us. If it's your first time on, you'll notice that your microphones are muted. That's so we can hear Jeff and I talk. If you have to hop off for any reason, don't worry, this is recorded and will be available in the members area later tonight and sometime on YouTube tomorrow. If you're catching us on YouTube, please like and subscribe so you can catch more of our videos. We're posting these every single week. If you have any questions about your account, access to Trade Trend or Zillion, trade alerts, anything open like that, account related, email support@altostrading.com, and we'll get to your questions sometime tomorrow. If you do have any questions tonight about presentation, market things, we'll give you opportunity to ask those and put those in the Q&A box located at the bottom of your screen. So if you just toggle, you'll see that, or the chat box, and we'll get to those periodically. Before I bring on Jeff, let me just read the disclaimer. Altos Trading LLC and Trade Trend Zillion software is intended to be used as an information service for subscribers, and it includes opinions as to buying, selling, and holding various stocks and other securities. However, the publishers of Altos Trading, Trade Trend Zillion software are not brokers or investment advisors and do not provide investment advice or recommendations directed to any particular subscriber or in view of the particular circumstances of any particular person. Altos Trading LLC, including its owners, do not accept responsibility for any decisions made by subscribers using the software, and subscribers to the Trade Trend Zillion software, but any persons who buy, sell, or hold securities should do so with caution and consult with a broker or investment advisor before doing so. So that being said, let me bring on Jeff. Jeff, if you're there, you want to grab the microphone?
Hello, hello. Can you guys hear me?
Yeah, I hear you great.
Fantastic. Well, welcome everybody. Yeah, as Richard said, this is an important week to be on. A lot of big things going on in the markets this week. Obviously had a rough day today in the markets. The broader indices all sold off, and we'll talk about why that is and what to suspect or expect from that moving forward for this week and beyond. Let's see. It looks like Henry might be having some audio problems.
Yeah, I see that. I'm messaging him right now.
We'll get you squared away, Henry. All right. Well, thanks for the intro, Richard. Welcome everybody. Yeah, Richard and Craig will be in the chat and the Q&A box, helping with questions and relaying those as they come up. So we got a lot of important stuff to cover tonight. We'll start out with our market overview, which is crucial this week. We skipped last week because of the holiday, or not a holiday. Yesterday was a holiday. We skipped it was Valentine's Day. So we skipped last Tuesday. So it's been a couple weeks since we met, but some of those key levels we talked about 2 weeks ago have come into play, and we're going to review what's occurred and then where things currently stand with our key levels. We'll take a look at the 36-month moving average, which really just doesn't want to divert from the mean. It's reverted right into that 36-month moving average and hovering around it for quite a number of months now. So we're going to take a look at that for February. Of course, not quite done with the month yet, but we'll review that. And we're going to be talking tonight. Again, it's really going to be focused on what's going on in the markets right now. So we'll take a look at expected moves, current volatility, and talk a bit about the Fed, as we've got FOMC minutes coming up tomorrow and how that might impact the markets. So we won't be focusing on a specific strategy this week, more market focused, and then because we've ran out of time in recent past weeks for a ticker roundtable, we're going to leave much more time for that tonight. So get your tickers ready, guys. Whatever you are interested in looking at and are currently tracking, we're going to leave more time for the ticker roundtable tonight, because I'm sure there's a lot of questions and a lot of things you guys are keeping an eye on. We'll wrap up with Q&A. All right, so without further ado, I'm going to get over to our charts. Let me see if we've got our data update here. We do. All right, and we'll go ahead and let me just start here first. So we've seen a reduction, a spike in risk and volatility. So looking at our sentiment gauges here, we were kind of down in the low range there for a bit, and it's starting to tick back up. Trend was also up towards the lower bullish range, and that's starting to tick back down. And currently our algorithms are weighted in the sell area. So we have more sell, our algorithms have more sell signals currently than buy signals, which is bearish. We don't have any top performing sectors. Energy has really been getting hammered, followed by consumer discretionaries and real estate. So interestingly, these are sectors that are often impacted by rising rates and inflation. So that's going to be something we're going to talk about. So let's take a look at the S&P 500, looking at the daily chart here. And we had a significant rotation lower today. S&P closed down 2%. And when we met a couple of weeks ago, we really focused on some key resistance levels at the century mark. So 4,100, which we ended up breaking through. And as I believe mentioned that 2 weeks ago, that Tuesday, if we break 4,100, expect to move up into the 4,200 zone. That occurred. But if that were to occur, which of course it did, watch out for strong resistance at 4,200. And sure enough, look what happened. We hit 4,200 and rotated lower. Not only that, broke through the prior 4,100 resistance level, which at that time was serving as support, and broke through that. So we've rejected a major resistance level and broken through a major support level. So that's important to take note of. So these levels now, 4,100 and 4,200, are overhead resistance. 4,200 having not been broken, of course, since we last met. But 4,100, if you look at past price action around the 4,100 level on the S&P, we've had significant moves to the upside or downside from that level. So that's a key factor in analyzing a support or resistance level. How big or dramatic or how far has the move been from that level? And in past instances where we were near these key levels, we've had large moves from that level. Now, it doesn't guarantee a repeat, certainly not going to be an exact repeat of that in the future, but something to take note of because it lends strength to the level and we need to really give it some weighting and pay attention to it. All right, so broken 4,100. So we need to now look at that as a resistance level. Okay, so these are our two key levels of overhead resistance. But now that we're rotating lower, where's our support? Well, 4,000, and we closed just a few ticks below 4,000, 39.97.34 today. So I'm not going to consider that a real strong break of a millennial mark, the 4,000 level, just because it's so close, and this can often lead to false breakouts, either to the upside or the downside, in this case, the downside. So interestingly, we'll take a look at here in a second, closely coincides to the expected move for the week. So we're right down, I think we actually breached it, but we're right near the lower expected move for the week, what the options market is pricing in for expected move this week leading up to Friday. Now, if we close again below 4,000 tomorrow and we don't get a reversal day, in other words, lower trading and then bullish close above 4,000. Well, let's first start with that. If we do get, oh, sorry, I didn't want to do that. If we do get a fake out tomorrow, it's likely the catalyst, and we'll talk about what that is, that's pushing markets lower has sunk into the market, and market participants will get over it. if they're not over it and the sell-off continues, so if that happens, then this will be the 4,000 millennial mark will be support if we can get it closed back above that. And then again, look for moves up into the 4,100 level. If tomorrow and Thursday, after we get the Fed minutes, markets, the acceleration, the sell-off accelerates, then we got to really start looking at key support levels at lower prices. So 3,900 is a level I'll be watching if the sell-off continues for potential support and reversal. 3,800. Okay, it's unlikely that we'll reach 3,800 by the end of the week, but not out of the realm of possibilities. We'll take a look at some of the option statistics too to get the probabilities on those. But these are really our key levels for the week to keep an eye on. So support 3,900 and 3,800, resistance 4,100, 4,200. Another thing to take note of is a trend line break to the downside. So if we go back to October lows, we've got a trend line here. Okay, and we just slightly really breached that trend line today. If we use the swing low here, right? So we're just we've slightly breached this this upward trend line. So again, we've talked in past sessions about confluence. We look for confluence between levels. So confluence between trend line, horizontal support and resistance, and dynamic support and resistance, in which case we use Bollinger Bands. I'm going to throw those up here in a second too. But look at the confluence with this uptrend line and the horizontal 4,000 level on the S&P. So very key level. And this is going to dictate really whether this sell-off continues, if we break and continue to push lower through this level, or we reverse higher. So really the cautious thing to do is to wait for Fed minutes to come out tomorrow, and see how the market reacts for more clarity. But because, it's a binary event, it's difficult to predict, but really what caused the extreme sell-off today, which by the way, this is the worst day we've had in the markets this year. So we're not that far into the year, but it's the worst day since December 15th. So we haven't had a sell-off of this magnitude since going back to December 15th. On that day, S&P fell 2.3%. But really what's driving this is we've had some hotter inflation reports come in. And now there's fear that the Fed is going to raise rates for longer, not necessarily to a higher magnitude, but just for a longer period of time. And the last rate hike was a quarter point. So that's a fear, and that's driving this. Also, the 10-year Treasury yield jumped up. So it's at 3.9%. And we haven't seen those levels since back in November. So people are basically concerned again that the Fed's going to have to be more aggressive with rate hikes and hike rates for longer. And it's kind of like the markets are catching up to some of this, some of the rising Treasury yields. So it could be short-lived, and that's why we really want to keep a close eye on these levels of support and watch for reversals around them. Or if they break with a lot of conviction, if we get strong closes below them, be aware of where the next lower key level of support is. If you're shorting or playing the market to the downside or looking for long opportunities on a reversal, It's really important to know where those are ahead of time before you get caught off guard. So that's kind of the catalyst, and really a great timing for our meeting this week, because we have Fed minutes tomorrow. They come out at 2 p.m. Eastern, and these Fed minutes tomorrow are going to be very closely monitored. A lot of people are going to be listening and reacting with their trading and investing based on what Fed chairman says. So just expect more volatility this week, particularly tomorrow and Thursday. We may see it kind of tail off a little bit after the Fed minutes, but we're gonna see some pretty significant volatility probably. I'm gonna throw the Bollinger Bands on here in a second, but before I do that, so the other thing is expected move. So let me take a look here on my other computer. All right, so using the option pricing models, which give us the weekly expected move going out to Friday's expiration, we've just breached the lower range of the expected move, which is right around 4,005 on the S&P, kind of right in here. So again, more confluence, not only, I mean, almost incredible that we've got a trend line break, a major horizontal level of support at a millennial mark, and the lower level of the expected move that the options market's pricing in for this week. Now, why is that's important for the rest of this week is one of two things obviously happens around an expected move. The market realizes, okay, we've kind of made the move that option pricing models were expecting, and now it's time to go back the other direction, which, let's see here, our upper range of the expected move is right around 4,150. Okay. Or the risk really when we break an expected move, especially on a strong bearish candle like this, if we get follow through on the subsequent days, is that it can really accelerate. In other words, we could see the continuation of an extreme sell-off down into lower levels. So we're below the expected move on the close today. And so making it even more crucial to watch tomorrow's trading to see where we move and close tomorrow. Because often, again, if we get breaches of one of the either the upper or the lower range of the expected move, we want to be extra vigilant on whether that follows through in that same direction. So that happened very early in the week, obviously, because markets were closed yesterday. So first trading of the week, we breached the expected lower range of the expected move. So keep an eye on that as well. Now, I'm going to also take a look at the Bollinger Bands, which measure volatility and standard deviation from an average. So I really watch these closely because if you guys are familiar with my slingshot setup, this is looking, it's not quite confirmed yet because we didn't touch the two. So each of these bands is 2 standard deviations away from the center band. Okay, this is our average. But a slingshot is when we get a major sell-off to the downside or major rally to the upside, and price trails one of the outer 2 standard deviation bands. We almost touched that band today, the lower band. So we're just about 2 standard deviation move away from the 20 period average. The other thing to note is the slingshot is always preceded by a volatility contraction, which is a result of a run-up in prices. And that means that the outer bands are converging, moving towards each other, followed by a volatility expansion, which they did start to do today. So we've almost got a confirmed slingshot to the downside because we have diverging bands and rising volatility, and we'll look at the VIX here in a second too to confirm that. But we have diverging bands. The one thing that really, again, didn't happen is today's candle didn't quite touch the lower 2 standard deviation band. But if it starts to trail that, there's a high probability we see moves into these lower levels of support that we just mapped out. Okay. So so that's why I'm still considering 4,000 as a support level, even though we closed a few points below. I want to see tomorrow with Fed minutes how the market reacts around this 4,000 level and whether we close above or below. In terms of my technical analysis, the probabilities seem to be pointing towards a continuation of the sell-off down into lower support. Certainly not a guarantee. For confirmation, I want to wait to see what happens tomorrow on that. So let's take a look at the NASDAQ 100, and we'll then look at the VIX. So we'll look at the Qs, the NASDAQ 100 ETF. So what's interesting here is the NASDAQ tends, and it of course did today, on a percentage basis, tends to outrun the S&P. So we had a 2% down day on the S&P. We have a 2.37% down day on the Qs. And so interestingly, we had more of a parabolic move to the upside in this most recent run up. But when we look at standard deviation moves, we're much closer to the mean on the NASDAQ. So we've got a lot more room to even get to a 2 standard deviation move from the mean on the lower band. To me, again, adding to the weight that this may not be the end of this rotation lower. Also, had a very steep and again parabolic uptrend line here, which is now actually really was last week, was broken, retested, and then sold off from there. Okay, so there's a lot of kind of variables matching up here, a lot of factors matching up, making a fairly strong bearish case for at least the near term here, and potential retest of lower levels. Now we do have support, which is kind of really a support zone, but we're right at it, right around 294, and sold off right and closed right around that level. But again, looking at the past price action around this key level, what did tech do? What did the NASDAQ 100 do? What were the magnitudes of the moves from that level? Right, quite strong. So again, not a guarantee of future market behavior, but a good indicator of what could happen near one of these key levels as it relates to the past market behavior. Even if we extend this back further, we've got a lot of price action there. It served as support on a breakout and a retest at this level. So right around 294, 295, key to watch. Also to note is we broke 300 on the Qs. Okay, that's a century mark, and had previously been serving as support, and now is resistance. I'm going to still count the 294 to 295 zone as support, but if we break that, particularly around a catalyst like Fed minutes, I expect to move down into the lower band. All right, and now let's look at the VIX, which is our volatility index and indicator. And I know some of you have been following along with my VIX trade. Come on up here. Oh, that's right. I got a little arrow up there first. So we've been talking about the risk of a VIX spike in the last few times that we've met together. All right, and it is currently in the process. So we've had some buy signals. Remember, we look for buy signals on the VIX from trade trend indicator near or below the 20 level when volatility is low and markets have run up. And we look for a buy signal and a confirmed spike back above 20. We ideally want to see, we've had one little one up into the 22 level and then a retreat back below. We actually got one on Friday, but it was a bit above 20. But we've now had two buy signals close to the 20 level, and another volatility spike today with the VIX up 7.72%. Also worthy of noting is we are, because remember the VIX is inversely correlated to the S&P, we've got a slingshot moving up on the VIX. So we've got VIX trailing upper band. So we really want to watch this for tomorrow as well. Is it going to come back down or is it going to keep spiking? So I'm really watching the 24 level on the VIX, 25 level. If we close above 25, it's like on the VIX, it's likely going to really accelerate the sell-off, or be an indicator that the sell-off is accelerating. It's probably more accurate to say. And then I'm going to be really, looking for 28 to 35 VIX levels. So yeah, VIX, I still do have my position on, I have my spread that I put on the VIX, which I'm now making money on that spread. I'd gone out, I think, around 60 days to expiration, but kind of halfway through my expiration cycle. But I sold an out of the money 24.29 call spread, call debit spread. So this spread will make money on a VIX spike. I still have 28 days to expiration, so I gave it a long time because I like to set these up when VIX is below 20, and particularly when we get a buy signal from the trade trend algorithm, which, looking here at the Zillion platform again, came in. Well, the last confirmed trigger on the buy was February 7th. So it can take some time for these VIX spikes to occur, but they're quite reliable. So my VIX call spread is now making some good money, and it will continue to make money if the VIX continues to spike up. So in terms of managing that call spread, I'm watching how VIX reacts around key resistance levels that we just looked at. And if I see any type of reversal, that's where I'll look at taking profits on my VIX call spread. But again, just to sum up, kind of all the factors are looking quite bearish today. And tomorrow, with Fed minutes out at 2 p.m. Eastern, is going to be, and how the market reacts to that is going to be a key, kind of a key, a clue, of what we should expect over the next week or couple of weeks, at least, maybe beyond. We always have to, stay open-minded and adapt to what the market's doing. So we'll reanalyze, which I do on a daily basis, but we'll meet again next Tuesday and obviously, revisit everything we talked about and see where things stand at that point. So that's our market overview, key levels, looking at the lower range of the expected move on the S&P, volatility, and what's going on with the Fed this week, the catalyst that's driven the sell-off today, and then the minutes that are being released tomorrow that are going to probably lead to increased volatility and market direction. But again, a lot of it's really going to be based on the words and the tone of Powell when he releases the Fed minutes tomorrow. So I'll pause there and see if we've got any questions.
Yeah, Lou missed part of your talk on the VIX spread. Did you sell that call spread or did you buy a call spread?
It's a call debit spread, so I bought it. And I bought it, I think, like a month ago. I can't tell you for certain, but I think it was somewhere around there. So the VIX was at lower levels. So this is the spread's still out of the money, but it's kind of starting to move in the money. So I bought a 24 strike call and sold a 29 strike call. And it was quite a bit further out of the money when I did that, because again, the VIX was well below 20 when I set the spread up. And I set it up with about, I believe, again, about 60 days till expiration. So currently I've got 28 days left on the spread. And it's an out of the money call debit spread. So it has a really good risk reward ratio. I think my profit potential on the spread is like, 4 or 5 times what I paid for it, which is really nice, because all I have to do is get a VIX spike within 60 days of putting the trade on, and things are looking good. And so, that was a call debit spread, which again, I like to trade those on the VIX when the VIX is below 20 and I get an algorithmic buy signal from our platforms.
Let's see. Lynn is asking right now in the aftermarket, the ES is up. Is that relevant to your thoughts on what do you think will happen tomorrow? I think it's just a spike for Asia, or what do you think?
Yeah, so not surprising. Typically, like with futures, when you see a dramatic daily sell-off, you get a little bit of buying coming in after market hours. I'm not giving much weight to it. And frankly, I wouldn't expect the futures to move a whole lot directionally. If they do, it'd probably be to the downside. But I'm not expecting them to move a whole lot until, because there's really not much out between now and 2 p.m. Eastern tomorrow when the Fed minutes come out, to drive markets, unless there's an unforeseen event or something. So right now, major market participants are basically waiting for Powell tomorrow at 2 p.m. Eastern. So you might see some, chop and directional movement, but I don't expect it to be of great magnitude until the minutes are released, at which point you're going to see the markets jump around a lot. And you might always be careful around major things like this, especially in the context of what we're in right now with high inflation and a lot of people listening in on this. It's very easy to get faked out. So like, I would never personally attempt trading a Fed minutes announcement like the one tomorrow. You may see the market actually fake you out. And, let's say the overall reaction ends up being bearish on the close tomorrow. You might see, the market shoot up significantly as the minutes are being released. And then once it all sinks in, they turn around and tank to the downside, or vice versa, right? Could go either direction. But key point being, be careful not to, I don't want to jump on the first bandwagon that moves the market in either direction. I want to wait really until the minutes are out to do that. And there's strategies that we've covered, and you can find those in our YouTube channel in past sessions that can be their option strategies that can be great for trading unknown events like this. In fact, I'm considering putting one on in the morning. You can do there are like ratio spreads and things you can do where you collect a small credit if you're wrong. So if the market, it's an ideal strategy for big market moving events or announcements where you don't know that which direction it's going to go. You just know the market's probably going to move a lot. So if it moves against you, you can collect a small credit for the trade. But if it moves in your favor, you can really make a lot of money. The way that you lose money is if the market doesn't move at all or ends up back in the same place. And again, that's just unlikely to occur on something like FOMC minutes for tomorrow in the context of, inflation reports coming in. And what was difficult about that is we saw a period of good news, and this is not uncommon, where it looked like things were starting to come back down, and then you get one or two, bad, hot CPIs or PMIs and stuff, and then everyone starts freaking out again. It's like, oh, I thought everything was okay, and then boom, I was tricked, and everyone starts to panic. So that's kind of what's happening. But yeah, that's on one of our past weekly sessions. There's some strategies, and I probably am, in the morning, depending on where the markets open up tomorrow, going to look at putting on a ratio spread and collecting a small credit for the spread. And more than likely, I'll place it to the downside, so that if the markets sell off big, I can make some money on that. But if they do end up going up, then I collect small credit.
Awesome. That's all the questions I got.
All right. Well, I promised that we'd leave plenty of time for Q&A and ticker roundtable tonight. So I want to stick to that promise, and there may be a lot of things you guys want to look at, or maybe have a question about, or want my opinion on. Again, I can't give any personal investment or trading advice, but I can certainly give my opinions on the markets and help answer any questions, strategy-based questions, or we can look at some tickers and do some analysis on those. So Richard, if you want to relay anything to me.
Let's see, Roger would see EMGN.
Amgen?
Yep.
Cool. It's a great pharmaceutical biotech company, which unfortunately the stock has been hit pretty hard. And guys, if there's anything specific when you suggest tickers that you guys want to look at, let me know that too. Otherwise, I'll just, look at some of the key levels, kind of give an overview on how I'm analyzing on a technical basis, analyzing this, the ticker that you suggest. So of course, Amgen has kind of gotten pummeled this year, topped out back in November. We have a slingshot actually here. So we had a sell signal, which just recently closed back, looks like kind of mid-January. Really nice sell signal and slingshot. So see how previously our volatility bands were relatively narrow. And if you guys have attended past weekly sessions, I always hammer this in regarding volatility. It's either contracting or expanding. And it always goes back and forth between the two. So it contracts and then expands, and contracts and then expands. It alternates, where I was looking for. So see how we have horizontal volatility bands, horizontal average. Price is coming down into the lower band. So what is at this point in time, say that none of this had happened yet, what am I looking for? Well, price is coming into the lower band. And then once I see the outer bands diverge, we're getting what? A volatility expansion. At the same time, price touches the lower 2 standard deviation band and sells off. So this is a sell-off. I could, can't predict the future with 100% certainty, but back in January, could have seen this coming. And so once that occurs, we can either play it with a bearish strategy to the downside. We had a nice sell signal from trade trend for a bearish setup, or we can wait for the stock to find support and rotate higher and wait for a buy signal. A buy signal actually came in today on Amgen. I'm going to actually zoom out a bit here. So we can take a look at the levels. So when we get when we get a slingshot setup like this, I want to look and see where are my key levels of support. Because remember, volatility always contracts, then expands, then contracts and expands. And right now it's expanding, but it's eventually going to contract and price will go back up, unless the stock drops to zero. It's eventually going to go back up. So and this isn't enough. This is more horizontal, the lower volatility band. But what I want to see is it really start to point back up. We've got the upper band pointing down. I want to see those point together. I want to see the stock come down into support. Looks like we got a bit of support here so we bounced off that on Friday last week. Got a rotation lower, the stock, rising tide raises all ships or sinks all ships. Because we got a rotation lower in the stock today, most likely just due to broader markets. But we do have support on the level that we rebounded from. So yesterday, well, not yesterday, Thursday and Friday last week, is this coincidence that we sold off into this level and then rebounded from it? No, it's a demand level. Well, also demand and supply level, depending on where, which point in the past we look at. But there have been buyers, significant buying and selling around that level in the past. So I want to see if this buy signal that came in today triggers, and that can be found, that price can be found on the main dashboard. We have a pending buy signal. Trigger price would be 242.47. So we're going to be looking at just above the high here. And if we can come up, then this support level will be confirmed and held. The one thing we have to contend with is center band, where we often can find resistance on a downtrend. So I'd watch for resistance right around 245, 246 if we do rotate higher and this sell signal is triggered, or sorry, buy signal. If we can break through the average, the mean, the center band, I'm looking for a return to higher levels. I see resistance from the 250 to 256, 57 zone, 58 zone. You can see how prices reacted around these levels in the past. So those are the key things I'm really would be watching right now. And likely whatever happens with the markets tomorrow will impact which direction this goes. How about another?
Yeah, quite a few. Let's see. Already let's see dollar CAD.
May not have that one loaded. That seems surprising. Now let me look here. Oh, I just typed in the symbology wrong. Sorry about that. There we go. All right, so we had a triggered buy on Friday. I don't particularly like these signals because they're in a congested area. I typically try to avoid congested price action unless I'm like, if my strategy to really trade the outer range, the outer bounds of a congestion area, then maybe so. But as far as trend and catching larger moves, I avoid congested areas like this. And of course, we got a buy signal. We got a nice move up on Friday, but a reversal off this resistance zone at roughly 1.35. So right now, this really just looks like it's in a bunch of congestion. And until we break either outer bound of this congestion channel, future directional movement will be hard to forecast. But these are, there's a pretty strong, right? It's a little bit lower than the bound I drew there previously. But obviously very strong level of support here, which really is the lower bound of this range, but more of a zone, as we did have reversal candles off that higher level that I drew. And then upper range, right around 135. So kind of a ranging play right now. Choppy price action's difficult. I really want to wait for strong directional move and strong levels of support or resistance that aren't, overshadowed by another very, nearby close proximity level of support or resistance in the direction I'm taking the trade. Just makes it, more difficult. So right now, not a whole lot going on and just a lot of chop.
All right, let's see. Robbie wants to see Shopify.
All right. All right, so Shopify, let's zoom in a little bit. All right, so there is some interesting occurrence here. Let's see if we go back to, I'm going to use the opens and closes more so than the highs and lows for this level, but it looks like right around 43 is a key level that was broken today to the downside. So see how we had price action here in past months and weeks? Not only that, this is another thing I look for with key levels. We had a breakout of the level. Okay, so this was, in past months, strong resistance because we see large sustained down moves from this level. So it broke back in January with significant momentum to the upside, but then it came back down. And usually when you come back down into what was a prior resistance level, which transitions to support, once price breaks it, sustains a breakout, and then retests, you see one of two things happen. You either see that level hold and price bounce back, or you see it break. But these can be good opportunities because whichever one of those occurs, it has a higher probability of sustaining the move in the direction of that occurrence. So there's some interesting things going on here with Shopify. And again, in no way personal advice or a trade I'm even going to consider or take, but signs are pointing bearish at the moment because we had a big run up and actually a really great buy signal here. Back in, looks like the end of last year, entry would have been around 35. Price peaked up around 55. So picked up like 20 points. I mean, that's a 75% move or something. So really nice buy signal. And sometimes when you get really nice signals from our algorithm in one direction and you get an opposing one that follows through, they can be fairly sustained. Now there was a sell signal, but what I'm also looking at here after a run up where we have parallel standard deviation bands, of course, strong uptrend, and then a volatility contraction where the upper standard deviation band, which is the direction the stock was moving prior, converges with the lower band. And then what we look for is when that's happening and it shifts to diverging where upper and lower band are pointing away from each other as they are today, is price touching or exceeding that band? In this case, today, it did close below the lower 2 standard deviation band. Now that's just, so we're with this stock, with Shopify, we're at the very first step of a slingshot. It's not confirmed to me yet, but I want to watch to see, depending on which way I play this. If I play it bearish, I want to watch to see, are we going to break the candle that actually breached the 2 standard deviation band? So I'd be watching that tomorrow. What is the occurrence of the break? Is it a strong bearish close where the, the close like today was close to the low of the day, etc. But this, all signs are kind of pointing bearish to a bearish slingshot setup. And if that occurs, this sell-off that really began back in earlier February could accelerate down into lower levels of support. I'd be watching the 40 level, which doesn't give us a lot of room if we were to take a bearish play on this. But if that breaks, then I don't see a whole lot of support, at least significant support, until closer to like the 37 level. So if this transitions into a confirmed slingshot, those are the two closest proximity levels I'd be watching for price to sell off into on Shopify.
All right, let's see. Mike's asking for Johnson & Johnson.
Oh, another great company, great pharmaceutical company, but stock has gotten beaten up this year. All right, so here is a slingshot, right? And it's been in the making for quite a number of months, since early this year. Oh, maybe like mid-January. I'm going to zoom out a bit here. So I'm looking at past lows. Looks like right around 156 roughly. I also am going to take a look. So when I draw these levels, I'm really looking for very obvious price pivots where prices touched and reversed significantly. So those are the first ones I really see as support. Now we closed below this one today, but this is what I'm looking at. And then if you look at the magnitude of the moves from these levels, what they've been historically. So it looked like we were rotating back to the upside from this support zone until the market kind of ruined everything today for everybody. So this again is likely a result of the fear of the Fed and the rising tide sinking all ships. So so I would watch those two levels for better indication of direction. But this is a slingshot, and I like to look at past slingshots. If you're willing to play this on a longer term play, these can be great opportunities. Sometimes they take a while, but here is like an example of a slingshot. And we had a couple minis in there, like that was a mini one. But we had a confirmed buy back here in October. And this one played out picture perfect and then actually went on to exceed the volatility expansion level. Again, if you're not familiar with the slingshot, you can find tutorials or videos of that we've done in our YouTube channel. But that's what that looks like. So I look for these. There's one. There's one. Again, these really far out exceeded the volatility expansion. There's one. This is actually a beautiful one. Buy signal right there at the bottom. And return. And these, pretty much all of these exceeded the volatility expansion level. Now there's one. So here's one that's, again, in the making. But we have come down into this really strong support zone. So this is, again, the zone I'd be watching. And if we can, since we closed back into that zone today, if we can rotate back out of it, then we may have the slingshot, rotating back again to the upside. I'd be watching the center band always, since it's dynamic. Price is below it currently, so it's dynamic resistance. Always watching that for potential resistance. Of course, that's a moving target. If we can break through that, then what I would expect to see is price to come up into the upper band, and then eventually a return back to roughly the 175 level. Again, that could take some time to play out. This particular slingshot took, see, it started in like early July, till early October, from early July to early October to bottom and reverse. And so a lot of times when I'm playing these on a medium to longer term basis, like if I were to take, if I were to play this slingshot, bearish slingshot, but then take it on the bullish side on a rebound, we don't have a trade trend buy signal yet. So I would certainly be looking for that. And maybe we'll get one if we were able to rotate back out of this support zone. So, I look for trade trend buy, but as you guys know, I don't like to generally enter all of my position at one time. So I might, slingshots, I often will scale in. And that way, if the sell-off's not over, I can buy more shares at lower prices. So, and that's another reason I'm so diligent with mapping out my support and resistance levels. Because if I know where they are ahead of time and I've planned everything out accordingly, I can scale into this and buy, I don't want to just do it. Probably, one of the worst things you can do is just react with no plan. And then you end up getting, caught off guard or killed, and you don't want that. So if I have a plan ahead of time, what I usually plan is, okay, I'm in the support zone. If I can get back out of it, rotate higher, get a buy signal from trade trend, I know where my potential areas of resistance are. But if we do break through this support channel and I end up, after I bought shares, I don't want to put my entire position on at once. I want to leg in so that if I'm wrong the first time, I have a chance to be right the second time or the third time even, and I can scale in and buy more shares at a lower price. Because really the deeper these slingshots get, the better opportunities they create. The key is just being patient and waiting for the rebound. This is a very steep a slingshot setup. And again, you can see in past ones, they can often result in very big rebounds, but the key is to be patient and to look for all the confirmations, know where your levels are, and don't expect to catch the exact bottom or top. Scaling is a great technique to, give yourself some leeway and not have to be exactly right every time. So yeah, this is an interesting one to look at for sure. Take one more and then see if there are any kind of general questions.
Let's see. Amazon.
All right. That one usually comes up every week, it seems like. So of course, Amazon's really, just gotten hammered over the last, when was it doing well? It's been a while. Made that run up in 2020, but then just really ranged, chopped around for like a year or more than a year, came back down. Here's actually a nice slingshot down here. Interestingly, that's pretty cool. We got all these buy signals when the stock was bottoming back in 2019. I don't often trade Amazon, or if I do, I trade options on it, but just from a very zoomed out high level perspective, there's very strong support down at these lower levels that we've already rebounded from. But looking at current market, there's an open sell signal. So this is actually a reverse slingshot. So we had volatility expansions, the outer bands diverging, price trailing the upper band, and then we had a retreat back into the volatility expansion. So this slingshot just played out like as of today. Now, what were we in here after? And so there's a sell signal. That one was triggered, looks like back in early February, roughly around 102 entry. So this one's probably, this signal is probably, $5 to $6 and, or no, sorry, $7-8 in profitable territory with a trailing stop up a bit below 100. So that one's still open, that sell signal. But interestingly, on this recent leg lower, we had volatility. So I'm always looking to see what volatility does. Is it contracting or expanding? Well, we were just, since the start of February in a volatility contraction. So we had a uptrend, and then price kind of retreated and didn't do a whole lot. And the volatility bands were telling us that, right? They were either sideways horizontal or converging. But again, a little bit premature here, but it looks like I want to see more, and price hasn't come down into the lower band yet, but I want to see if I see upper band really point up, the lower band's already starting to point down, and at the same time I see price breach the lower band, then my expectation is an acceleration of the sell-off. But we could find support here, so I do see some support around 90 to 92. So I'd be watching that for a potential reversal point. You can see previously when we came down to that level, we moved up. When we broke that level, we moved down. So fairly significant level near term on that one. Again, open sell signal, and I'm always asking myself, what is volatility doing? Is it contracting or expanding? And what is price doing relative to the standard deviation moves? Is it moving towards an upper band or away from it? Is it moving towards a lower band or away from it? And that, just doing that alone can give you a good indication and answer the question, am I bullish or bearish on this stock on a technical basis, not obviously considering fundamentals. But yeah, another great one to look at. So great suggestions, guys. Thanks for sharing those. So we'll go ahead and open it up to Q&A. If you guys have any general questions or anything we can help you with, let us know before we wrap up for the night.
Yeah, a question came by earlier. I don't know if this is more of a question for Daniel since it's his baby. But do you know why at times like you see a sharp move up or sharp move down on the chart with Zillion and there's no red or green divergence cloud?
Yeah, I mean, Daniel, you're right, would be probably a better one to answer that because he actually programmed the algorithm into the divergence cloud. I developed all the logic behind the trade trend indicator, but I'm not nearly as familiar with the divergence algorithm and logic as Daniel is. But I do know that there are, it's a complex algorithm and there are key factors and variables that need to line up for it to create a bullish or a bearish divergence cloud. So I can tell you, because I do use the cloud in my analysis and decision making for my trading and investing, that it's not out of the realm of possibility or not even uncommon to see significant moves outside of a cloud. So really it just means that there wasn't all of the variables within the algorithm, the logic that goes behind it, everything didn't line up for it to create that. So certainly there could be, significant sustained moves that don't result in a cloud, but also there might be a better probability of that sharp move being short-lived. So, not saying it's definitely going to be one or the other, but it could be the case that the factors just haven't lined up yet. And maybe they will, maybe the cloud will appear. Also something to note, and it's a great question because it brings up something that I think is important. We're looking at the cloud visually on the chart. When it becomes faint, it can be sometimes difficult to see depending on how you have your background set. Like to have my background in like darker colors. So sometimes it can be hard to see the faint cloud. So it's always a good idea if you're a Zillion user to confirm the cloud on your scanner, because it will tell you certainly, even if the cloud is faint, if there's any bullish or bearish divergence there. So always make sure to check the scanner too.
And Ed's wondering if is it possible to chart any like industry group on Zillion. I don't know if it's possible
Sorry, say,
to.
say that again.
He's asking if there's a way for Zillion to say chart an industry group as a whole.
Probably the best way to do that is to use one of the ETFs. So like if you want to like chart the energy, I'm assuming that's what you mean. Like you can use the XLE or the consumer discretionary XLY real estate, because those ETFs are built around that sector or industry. So that's a good. I mean, one of the great benefits of ETFs, there are many others, but is that it can allow you to make plays on broader industries and sectors, and also to analyze those by using the sector industry ETF that tracks it. Does that sound like what he was asking?
Yeah, I think so. Nalini wants to know, since we had such a major sell-off today, do the algorithms reset the indicators, or like did the clouds change from green to red, or does it kind of disrupt the whole system because of that, or?
No, yeah. So like, if I understand the question, the all the data has been updated. So what you see currently is based on what occurred today. So yeah, our algorithms and stuff will pick up, the move from today and give an indication of, the readings based on the close the close through today. So yeah, it's definitely going to impact all of our, market sentiment gauges, sector performance, signals, divergence clouds. Will all be factoring in what occurred today, if I understood that correctly.
Yeah, and then could you maybe just click before we sign off, show Roger how to create and use the watch list?
Sure. Yeah. So your watch list can be found in the upper right corner of the scanner section of the dashboard. You can create new watch lists. So you simply click on the drop down. You can name it whatever you want. You can create unlimited watch lists. And then once you've got your watch list created, again, just by clicking the drop down and new watch list, or you can use a watch list that's already in, you'll select which one you want. So maybe I want to go to my main watch list. Okay. And I'm going to go back to scanner. And let's say I want to add crude oil futures into my watch list. I can left click on the ticker I want to add and drag it up to where it says add to main watch list. The other way to do it is to right click. Let's say I want to add gold futures. I can right click gold futures and click add to main watch list. And then when I go over to my main watch list, the two tickers that I just added. So there's two ways to add those, but that's how you would do that. And then of course you can toggle between watch lists as well. Just make sure you're selecting, which sometimes, sometimes I'll forget too, like, am I on the scanner or the watch list? Because they look similar, but you want to see which is highlighted. So now I'm actually back on the scanner, and now I'm back on my watch list. Hopefully that helps you, Roger. Let us know if you have any other questions on that.
All right, that's it.
All right. Well, thanks so much, guys. I hope you got a lot out of the session tonight. Again, keep an eye on Fed reaction tomorrow. I think that'll give us some really good clarity on where the markets are going and whether the sell-off continues or reverses back up. So I hope you guys have a great rest of the short trading week. Thank all of you and appreciate all the nice comments from you guys. And we will be holding our session again next Tuesday. So we'll be able to come back and see how things played out and how those levels worked out that we looked at tonight together. So keep a close eye on those. The recording will be up in the members area, and we'll have it up in our YouTube channel likely tomorrow. So if you missed anything, had to drop off, or you joined late, you can go back and review. And of course, all of our past weekly sessions are in there as well. So thanks again, guys. And I hope you guys have a great rest of the trading week.